I put together this amazing presentation, if I do say so myself. So one thing I've been noticing is that when I see all these market updates from everybody in the real estate world, I notice that we just talk about the numbers of that month. And I know if you're not looking at this stuff every day as much as we do, there's no context to the numbers, and they don't mean anything. So what I've done is I've taken the advice from our president and compiled some really cool information for you guys. So I'm gonna just quote her so I can give her a quick shout out to Ashley Jackson, our 2023 Austin Board of Realtors president. As we compare the market today to what was an abnormal market in the previous 3 years, looking at the year-over-year numbers needs the added context of comparing trends month to month. So that's just what I did. I took the last 3 years, starting from 2020, 2021, and 2023, and that's gonna give us context to the numbers for this year, for January and February. Okay, so I'm gonna start with Williamson County, and then we can really get a little bit granular, a little bit more into the weeds by looking at the actual cities. And it's pretty astonishing, the numbers, when you get to see it with this context. So back in 2020, before the pinnacle, the peak of the real estate market in Austin hit, we were looking at a median price of $307,000 for the year of 2020. 2021, it jumped to $425,000. 2022, we saw it peak at $478,000. That is a whopping jump from 307 to 478. Now, if we go to this year for January and February, so January of this year, we saw a median price of 438. So not much, well, actually no, look at that. It was a little drop from 478 for the entire year now to the month of January of this year, 438, and then we saw it decrease again at 410. So this is in line with the interest rates being going up, because they heavily influence the real estate market. So median prices is an easy number to wrap your mind around, and just take note from where we're sitting at right now at 410. At the height of the market, we were looking at 478. Now, what do I think? I think as interest rates go up, we're gonna still see a leveling off of home prices. That's not to say that we're gonna get to these levels of 307. No, we don't. Appreciation doesn't work that way. But we won't see the 478 number, because that was heavily influenced by how low the rates dropped. Now, you might be asking yourself, what does the absorption rate mean, and why do I have that here? So this is an awesome way that we use to measure demand for a particular. We could do it by city, we can do it by neighborhood, we can do it by zip code on the demand for that particular area. It's actually pretty simple math. So if we look at the number of active listings and we divide that by the number of closed sales now, of actually closed transactions, and that will give us a number of 4.4. So for January of 2023, we're at 4.4 months. So what does that mean? That means that in 4.4 months, if we continue at the sales rates of how many homes are being bought and sold, in 4.5 months, all the inventory would be wiped out. So that tells me, so the rule of thumb is that we're in a seller's market if we're in the 7 months or higher range. And if we're in the 5 months less than that, actually, hold on, let's check this out, because I forget from time to time off the top of my head, and I have this here to help me better explain it. Okay, so navigating market shifts, understanding absorption rates in real estate. An absorption rate of 5 to 7 months is considered a balanced market because it represents a relatively even distribution of supply and demand. In a balanced market, neither buyers nor sellers have a significant advantage, and property prices remain relatively stable. This equilibrium in the market results from a healthy level of inventory that meets the current demand. Okay, so this is what I was trying to say. We're gonna say a little bit better. When the absorption rate is lower than 5 months, it indicates a seller's market. So I had that mixed up. My bad. In a seller's market, the demand for homes exceeds available supply, leading to increased competition among buyers. This heightened competition can result in bidding wars, driving up property prices and giving sellers the upper hand in negotiations. Now, on the other hand, when the absorption rate is higher than 7 months, it signifies a buyer's market. In a buyer's market, the supply of home exceeds the demand, giving buyers more options for negotiating. Okay, so an absorption rate of 7 months plus buyer's market, and absorption rate of 5 months or less than that is a seller's market. So going back to our main page, so we're looking at a seller's market still, and it's trending from January to February to stay on that path, because we're going from 4.4 to 3.09. So the demand for Williamson County is still huge, so meaning we're in a seller's market still. Now remember, this is as a whole. Williamson County is a pretty big place, so we can get the story can change very significantly if we get down to a city, and even more down to a neighborhood, and we're going to talk about that in this video. So let's look at Cedar Park. This is where I live, and let's check out the numbers here. So let's start from 2020. Median price was $353. Then we jumped up to $499 in 2021. Then we jumped up to $560 in 2022. That's a huge, look at how significant that was. And then for this year, January of 2023, we remained at $425. So we still are above the $400,000 threshold. And then last month we came in at $425. So not much of a change there. So let's look from 2020, in just a span of 3 years, we went from $353 to $425. And at its peak was at $560. Okay? And we had an absorption rate of 2.6 in January this year to 2.2. So Cedar Park is high in demand. So we are in a seller's market still in Cedar Park. And inventory is trending upward, because we went from 0.0, and we're still kind of at least a month's worth of inventory. But in order to be in a healthy market, we want to be more at 6 months of inventory. Will we ever get there? Oof, who could say? I would bet it's not going to happen this year. That's for damn sure. But another thing I wanted to really showcase was this. I think this is really important. The appreciation. So I got ahead to the math, and we're looking at the home appreciation in Cedar Park from the year 2020 from 353,000 to what it is last month, 425,000. So from 353 to 425, how much of home appreciation is that from a percentage standpoint? That is 20.4% appreciation. So that's a return on your investment. That's how much your home, your asset, has appreciated. And if you look at any other returns when you're going to invest your money, that's still pretty good. That's really good, actually. So I know we keep seeing in the news how crappy the real estate market is looking, because we're seeing the interest rates skyrocket. But the numbers don't lie, and the numbers tell us a story. And I'm here to tell you a story, because putting this stuff together is pretty fun. And just showcasing it like this, I think it really gives context as to what's happening from a local level. Because we have to remember, when you look at the news, they're reporting at a national level, and it's up to us real estate agents, realtors, to report at a hyper local level. So let us look at Leander, because I have a lot of good friends that live in Leander. So starting from 2020, median price in 2020 in Leander was 314. Then it jumped up to 460. Then jumped up to its peak at 510,000 in 2022. So starting this year, for the month of January now, we're at 499. And last month we were at 487, so we saw a drop. One thing to take, absorption rate. Let's talk about the absorption rate. We went from 5.4, almost trending towards a buyer's market, and we dropped to 2.3. So a lot of transactions happened between January and February, dropping the absorption rate to 2.3. So Leander is still remaining a very hot market. Another thing to keep in mind is I love looking at this price distribution. I'm going to zoom in here. Look at what the price distribution for the year 2020. The majority of houses being sold were in the $200,000 to $400,000 range. And you'll see as we go further in, like year over year, that's trending upwards. We're starting to see more houses being bought and sold higher on this price distribution scale. And then for last month, we're seeing more houses now in the $500,000 to $750,000 range. So what is that telling us? That's telling us that the appreciation has happened, and that doesn't just go away lightly now. So the whole city of Leander has appreciated as a whole, and these numbers are reflecting that. So let's take a look at the home appreciation from 2020, so looking at 314 to 487. So what percentage do you think that is? 54% home appreciation in just 3 short years. From 2020 to 2023 for the month of February, 487, and we jumped up to 54% home appreciation. Now, I always like looking at the numbers like from across the spectrum, and guess what city had like the craziest jump? I'm not surprised. I was surprised at first, but they've been trending like this for some time now. And some of you may have guessed it. Yeah, if you guessed Liberty Hill, you're right. They had the highest appreciation from 2020 to 2023 at 92%. So let's look at that number. So back in 2020, I don't need this anymore. Back in 2020, it was at 358,000. Pretty modest, I would say. 2021 jumped up to 418. 2022 jumped up to 459. And it just, look at that jump. That's crazy. January this year, 785. Last month, 689. So from 358,000 to 689, that gives us a home appreciation from a percentage standpoint of 92%. And you can see how I do the math here. That's how you calculate home appreciation. Isn't that nuts? Liberty Hill, you guys are doing it. And look at the absorption rate. We're going from 4.6 to 5 months. So a little trend upwards, going more towards still seller's market, and you can see how it reflects here. The months of inventory is actually increasing. So maybe next month we might see this break the 3-month threshold, and we might see the absorption rate higher than 5. If we see that, that means we're trending towards a buyer's market, but we're still in a seller's market. So I really want to showcase that I could do this for any city, and where we really get to dig into the numbers is doing it by neighborhood. So I went ahead and picked Avery Ranch as my neighborhood of choice. Avery Ranch is kind of interesting to look at because not a lot of transactions or people who live here don't move, and you'll see that in the numbers. All right, so looking at 2020, we went from a median price of $360,000, and 2021, $550,000, and in 2022, $599,000. So January of this year, we went back down to $429,000, and then we have no action for the month of February. Look at the absorption rate. We went from 0.66. We didn't even break 1 a month. meaning that when properties go up for sale in Avery Ranch, this neighborhood's so hot, it gets scooped up right away. Look at the days on market, 18 days. That's super fast. That's lightning fast. And look at the active listings for January and February. 2 for January and 1 for February. That's nada. That's nothing. And you could see when people who move here love it there and they don't move. They do not move. So if that's a neighborhood that you're really trying to get into, if you see something, you have to jump on it and be prepared to probably negotiate, because that's probably going to be a multiple offer situation easily. Home appreciation, looking from the numbers from 2020 at 360 and 2023 of this year. I think I went with January because we were flat for February. We're looking at home appreciation for Avery Ranch of 19%. Still pretty darn good. Because I know the stock market historically is anywhere between like 8 to 12%. So 20%, close to 20% is pretty good. I did one for fun, Zilker, because I knew that was going to be a high. It's a very iconic community, so you're going to have probably some $1 million listings in this neighborhood. So let's check out Zilker. I'm at 16 minutes here. Okay. I really want to get this done in 20 minutes, so it's not too much of your time. So Zilker neighborhood. Okay, from 2020, we were at a median price of a home at $657. 2021, we were at $740. That's a nice jump. 2022, $885. Now notice the price distribution. We're breaking the $1 million threshold here. So it's pretty. Zilker is one of those communities where, look, you have a full spectrum of houses in the 200 to $1 million plus. So what does that tell me? That we're probably going to see if a lot of these homes that in the 500 below range bought and converted to attract. If we're starting to see transactions in the $1 million plus in a neighborhood that has these kind of price homes, then we're going to see a lot of gentrification, a lot of homes being bought and resold that have been remodeled. So let's look at this year. Wow, look at for January of this year, it broke to a $1 million median price of a home. That's crazy. And then we went back down significantly to $785 for February. Absorption rate 9.3. So we were actually in a buyer's market for the month of January. Okay. And then for February, look how much transactions were bought and sold, because we went from 9.3 to 3.1. Now again, if for the absorption rate, we just take what's currently active on the market, so we at 28, and we divide that by the amount of closed transactions, which is 3. So 28 divided by 3 gives us 9.3 months, meaning that this is like the sales rate, so the velocity of homes being sold given the demand for that particular area for that particular time frame. So meaning that in 9.3 months, that if we kept up this rate of for the 28 homes listed, 3 were being gobbled up in 9.3 months, all the inventory would be exhausted, would be bought and sold, and would be down to 0. But that changes month to month. But an absorption rate is a great way to measure demand for any particular area, so we know if we're going to be in a buyer's market or seller's market and how to react accordingly. And we can see here, look at this, over 66% of the homes that were sold in Zilker, in the neighborhood of Zilker for January 2023 were over the $1 million plus range. Isn't that nuts? Wow. So there's a lot of homes being, I would imagine, bought that were probably built in the, I would say early 1900s. Because I've seen, you have neighborhoods that houses that were built that I've seen like in early 1900s, like 1940s, 1950s, that are probably being remodeled, making them newer, making them more prettier, and sold, which is kind of crazy. But that's the reality here, folks. Now, I talked about absorption rates. I talked about different types of markets. I know if this is your first time, if you're probably ever being exposed to this kind of like terminology and just how the real estate game kind of works, I have these awesome, cool little pages that will help kind of break everything down a little bit further. And this is my market update. This is stuff I love talking about and hopefully showing you how it works, because there is a rhyme and reason to this, and educating yourself is part of the game so you can be a savvy buyer or seller. And I think once you understand it, you'll be really intrigued and probably geek out with me about this, because Austin, if you live in Austin, you know it's a hot market. You know it's going to stay a hot market, and you want to stay on top of things. That way you understand it. I know when I understand it better, it just makes me sleep better at night, because like now I get it, because it's gonna make, the numbers are gonna tell us a story and it's gonna make sense. So that's it for now. Remember, if you like these types of videos where you just see all this information in one scoop, I like to do a deep dive analysis in areas that I really want to do business in. So Cedar Park, Leander, I really focus my real estate business in Williamson County, but I do Travis County as well, right? That could probably be its own video, but I do Travis County and different neighborhoods in Travis County. In Austin, let's take a look at Austin really quick. I'm at 21 minutes. Okay, I got 4 more minutes and I want to wrap this up. All right, Austin housing market 2020, we went from 424 to 537 to 590. Okay, and then for January and February this year, we went to 525 to 532. Check that out. So we went from 2020, 3 years ago, 424, and we're at 532, giving us a home appreciation of 25%. Not bad, not bad. And we're looking at the absorption rate, 3.9 to 3.1. So we're still looking to be in a seller's market for the city of Austin. Pretty healthy spread for price distribution. So we have homes in the city of Austin from 300 all the way in the million plus in the same neighborhood, or city, I should say. The numbers, days on market, are trending upwards, and this is all across the board from what I've seen. So meaning that buyers are having more time to, for their search, and sellers are having more time to sell their home and search themselves for the next home they're moving into, right? So that's a good thing. When we're in a market, when it was super hot, when it was a seller's market and properties were less thereof, and people were scooping them up. I mean, it wasn't giving anybody time to do anything. Things were moving way too quickly for such a large transaction. So it's good that we're kind of normalizing here, so people can have time to make a decision. So you could see here, I have these types of reports for. I mean, I can make this for any neighborhood, for any city, and it's really nice just to see everything together side by side. And if you haven't guessed by now, I am using Notion. Notion is a wonderful tool to just consolidate information and just to present information. I freaking love it. Here's Round Rock. I could do a video on each of these places if you guys really want to. And if I see you guys comment below and reach out to me, I can do a whole segment on your city or on your particular neighborhood. Okay, so this is a market update for, I'm going to call it for March 2023, looking at the numbers for the last couple years and most recently the last 2 months, so we can give us some type of context on what the real estate housing market is looking like, from a hyper local level. Thanks.